The market just nuked again, over $1 billion liquidated in just a few hours, wiping out longs across every major crypto. Bitcoin is down, altcoins are bleeding, and fear is spiking fast. Is this another shakeout, or is it the start of something bigger? Let's find out. So in case you haven't been active on crypto Twitter, essentially what's happened is we've had a massive amount of liquidations, 1.1 billion, 290,000 over-leveraged traders were liquidated. But aside from this, a week ago, we had the biggest meltdown ever with estimates around, well, firstly, it was estimated at 20 billion, but people have said it's up to $400 billion with some funds going down as well, all potentially triggered from issues with Binance, essentially. That left 1.6 million traders just wiped out. And I think that was the most brutal reset in leverage ever. But in addition to that, our recovery hasn't been seamless, of course, because there's a lot of hurt in the market. We also have these major macroeconomic headwinds, which we'll discuss in other videos, but essentially we need to see interest rates come down, but without inflation going up, which is extraordinarily hard to do. And then there's this major political row between Trump and China. People just misunderstanding something. It just seems like there's no diplomatic agreements happening between them. And there's also some options expiry that's coming in. So let's have a look at the charts and kind of go through that first. So this very important thing is just Bitcoin on the weekly time frame. It only works on the weekly time frame, and it has the SMA 50 week. The TLDR is when we're above, everything is good. Markets go up. When we go below, we either have to bounce off it within that week. If we start to have weeks that close below it, it is bad news. It's all over. And we can see this like all the way back. Now, it is a little bit of a lagging indicator sometimes. So in 2017, we had the peak here. And by the time we got the weekly close under it, well, like things were pretty nascent and things were pretty nascent. Then we dropped down 65%. So just keep in mind that, but it works back even further. Of course, these times, just for context, I wasn't around in 2013, but in 2017, there was a lack of things to do in crypto. It was very much a speculative, very speculative, 60% down here. And then things pick up, and then you've got the start of the bull. Now, this cycle is a little bit different. We're going to have a video that kind of covers that, of course. We had a little bit of a mini surge that happened in the middle of 2019, and then things started for sure after COVID. That was when things were really, really good. We came down, we came up a little bit higher. So we can touch the 50-week SMA. Now, in this last part of the cycle, yes, things kind of started looking a bit more exciting from November, December in 2023. But essentially, we started to really shine at the beginning, about March of 2023. And that's when things rocketed up with Bitcoin. Now, we have to pay attention to a couple of things, and the fact that we can bounce off this SMA. But we have to keep in mind, and nothing is financial advice. This is education. We've done our research. We have a direction we think the market is going in, but you have to use your own research and you have to take your own risks yourself, right? So we feel that we're going to bounce off this, but we're going to go into that in a little bit more detail. But if we don't, if we start to get a weekly close beneath this, then we're going down. So when we have a look at fib retracements, this gives us a lot more information to play with. So if we turn these on, we can go from September 2023, so bull markets definitely, we're above the SMA, up to 74,000, and then we have a correction. And you can see exactly where we bounce off. It's the 0.5 level fib, and then we go again. So we touch the SMA 50 week, we come up, we touch it again, and we come up. So that's one thing to keep in mind, that 50% level. The Pizzinos are also big fans of this 50% level. We go from the next swing low to the next swing high, and we come on down. We do not touch the 0.618. We touch the SMA 50. I'm just going to say the green line. We touch the green line, and we bounce off the 0.5. We hit it a few times, about 4 times, and then we come up. And of course, early in the market, you've always got more exponential growth, typically speaking. Of course, if rates come down, then we could see some explosiveness as well. And altcoin season, we're still hoping and excited for that. Same thing here. From here to here, we're currently at the 0.382 fib. So what does that mean for us? Like, how do we kind of position ourselves? So we've seen that we're still in this bullish uptrend. We haven't got any confirmation that we're going down yet. And I don't want to say, I don't think it's over. I do not think it's over. So I would be looking for buyers to step in at this level, at this green line level, just around 101,000, maybe down to 100,000. Although we could see some wicks lower, it's very difficult to catch these falling daggers. So you may want to set some orders here if you have a smart system of having some USDC or USDT aside for when the market does its corrections, because the market will correct. It's not always going to be up only. Now, if we have a look at the size of the corrections, the first one of this cycle was around 33%. The next one was around 32% from the top to the bottom in the swing. And we just recently had an all-time high. And if we come on down a similar amount, this leads us down quite aggressively to like around 87, 88,000. Now, I'm not expecting the weekly to close at that point. I'm just potentially thinking we could have a candle, a daily candle, something that comes on down, and then within the week, we would come above. That is my expectation. I want to show you now what the altcoins are looking like. Of course, altcoins will follow Bitcoin strength to a large degree. There's going to be some that are stronger than others, and then you can work that out. Now, Raoul Pal is very bullish on Sui. However, it is not faring the best out of them. You can see we're touching at the 0.786 level from the April low to the recent high. Well, it's a recent high, not an all-time high or anything like that, but the recent swing high. And this is where we are. So it doesn't have as much strength as something else. So BNB is a little bit harder to read because it's just harder to read because it's up only. Most of it's owned by Binance and Binance team and whatnot, I believe. And it has been showing a whole lot of strength, but there is a little bit of movement on CT to kind of move away from Binance, essentially. So I'm not going to play this one right here. It's more of a spot hold. Pengu is just a token that I think will do very well in terms of the meme coin world. So we can have a look at Pengu right here. It's holding onto the 0.618. It can still lose this. There is more competition in the meme coin space, and there is a bit of a rotation of capital out of the meme coin space, in my personal opinion. But you can see if it was on top of the 0.5, that would be great. But we're looking at the weekly time frame as well, and we probably shouldn't be giving it a weekly time frame, maybe something a little bit less. But I think it's important to use the longer term time frame just to see how it all works. Hyperliquid is sitting at the 0.5, so this is looking fairly healthy. Solana's at the 0.5 level as well. It hasn't always been. It does have this history of bouncing off the 0.618 and then coming up further. But this is on a weekly time frame, and I'm referring to the daily chart when it does that. So I'm expecting us to be fine and stay above 0.5 with the way that we currently have the data on the markets. As an example, there's likely a rate cut end of the month. We'll cover that closer to the end of the month. Now, Ethereum is actually looking the strongest here. I think with Monad coming, it's a EVM layer 1 that's coming first week of November. We think mainnet's going to come. Even though it doesn't use ETH for gas or whatever, there'll be a lot of people bridging over. Wormhole will support bridging over as well. So that's something you want to look out for. And I think we can clearly see there's more strength in the Ethereum token right now. ETH versus Sol, it has more strength. Not financial advice, but I have swapped some Sol to Ethereum for the short term, and I'll swap back, of course, when there's a change in strength. So here we can see we're quite safe at this level. Now, I'm not expecting it to come on down all the way here, but if BTC does start to falter, you may want to set some limit orders. And if you liked DLMM, you could set up a system from the current price, coming from the current price here, and just coming all the way down to this level here in a bid-ask system. So ask, so a little bit, more. And then if you touch that, we'd have to see what the chart's doing, of course, but you take it out and you flip it into a bid system and a little bit more. If you don't know what I'm talking about, you must watch my DLMM video. Now let's have a look and see what has happening in terms of crypto fear and greed. And let's also zoom out to the last time things are fearful. I'm also working on a different channel for trading. And one thing I want to mention is when things are fearful, that is typically the best time to buy. And when things are greedy, that is typically the best time to sell. We're at 22 right now, which is very, very scary. Has got lower, but that is very scary. And when we overlay the two charts on the daily time frame, you can see whenever we touch fair, this is, if we backtrack, right? Whenever we touch fair, this is typically a good time to buy. Quite often it's a DCA spot technique, right? You would buy a little bit more, buy a little bit. And then as soon as you get to greed, you come up into greed. We're not in greed. First day in greed, you take some profits. You DCA out. You come into extreme greed, you DCA out. Buy here, sell here, right? It's a very profitable decision, even getting anywhere, like not even worrying about the wicks. This kind of price range on Bitcoin, right? We're looking at like first 12% move and then a 33% move. Of course, you can hang some on as well, but I just want to keep in mind, I want you to keep in mind that fair is good for buying, typically. Now, the other thing we want to look at is the daily exchange volume. One reason why I don't believe the cycle is over is there's a lack of exchange volume. Of course, the centralized exchanges like Coinbase and Binance, Coinbase is the best one for retail from the metrics we've had in previous cycles. A lot more people are coming on-chain. There's a lot more liquidity and volume on-chain, of course. So we might have slightly skewed metrics, but essentially what we're looking at is an increase in volume. Of course, there's a lot of people being liquidated and there's a lot of shorting happening, but it's still an increase in that volume. And we want this to come up. We want a lower high, a higher high. We want something going up, a trend going up. And that's what we're seeing right now. So that looks pretty good. Now, at the same time, we're currently sitting at $1.22 billion in wrecked, and a lot of people in the long market were wrecked. I did not see it as the best time to go and enter with leverage because it was such a major flush out. There were so many people hurt. I went ahead and I bought some more Sol and ETH at the lows, but only in the spot market. That's just what I did. I just didn't think it was like the perfect time to re-enter. We need a little bit of more confirmation is what my viewpoint was. The next thing we'll touch on is gold because we've got some good analysis on this. So gold has been outperforming Bitcoin, Nvidia, Apple, and Google. It's not just outperforming Bitcoin. We have to keep in mind it's also outperforming the big tech giants. And this has gone absolutely parabolic. I haven't seen this myself, but I've heard of people lining up at pawnbrokers to buy gold. So it's reached that kind of meme coin euphoric stage of the late stage of a market. I mean, it's gold, but it has happened before. And let's have a look at the chart. So if we have a look at the chart, this is the gold chart here, and underneath is how it reacts with when Bitcoin happens. And the TLDR is when gold goes up, Bitcoin doesn't. When gold goes sideways, Bitcoin goes up. That is what we've typically seen, okay? So if we have a look in 2023, we have this resistance level for gold, and we can clearly see that Bitcoin went up. It went up, and then it's not an exact time, but Bitcoin then hit some resistance, and then gold went up. Gold went up, and they just take it in turns. At this point, gold hit some resistance at this point here, and you can see it. Bitcoin basically broke out immediately, and it hit a pretty high amount, and then it kind of came on down. It's not like an exact aspect to it, but it's pretty damn workable and close. At this stage, you can see Bitcoin came down, then it started to come up. This is also around the election time. It started to come up, and Bitcoin struggled, and then it continued to move up. And this is one rare time when things went up together. They went up together. Then at this point, well, they didn't really go up together. They went up together for a very short period of time. Bitcoin then hit some resistance. Sorry, gold hit some resistance. Bitcoin then went up further. Then Bitcoin hit some resistance, and gold started to had a few more months of consolidation, and now it's started to come up. So what is the takeaway there? From the data that we can see, and gold's at all-time highs, when gold hits a bit of resistance, the markets, it gets to a point and it starts to consolidate. That's when we're thinking we should see a little bit of a run with Bitcoin and then the other majors. Now let's have a look at the traditional markets, because the traditional markets have a lot more liquidity. So CNN Business, the traditional markets are at extreme fair 24. Now last year at April, and now they're at 24. This is mostly over tariff news, but there are some scary things happening in terms of China's advancement with the AI sector versus the US. So it's not just tariff news. Now the S&P 500, it corrected. Obviously, there's more liquidity, but it corrected a small 2.3%. So it's just a small dip. And remember, this is still very clearly all-time highs. This is nothing compared to what we saw from February going all the way down to April, where we had 22% moves down. We had 2.33%, so far better. However, we have to look at the fact that this came from President Trump saying 100% tariffs on China, and he's always gone back on these sort of things. So this came out earlier today, and maybe the markets improve significantly by the time this video gets quickly edited and released. We'll have to wait and see. But because all we can see already is the fact that the candle has started to come up. We've come on down and we're starting to come up on the daily time frame. So Trump is meeting with President Xi in 2 weeks. I think we'll be fine with China, and that's basically what it is. So pretty crazy. And then the Dow races minus 500 point drop and turns positive as President Trump says no when asked if high tariffs will remain on China. So that's how everything looks right now. I personally think the cycle continues. I do not think things are over. Of course, nothing is financial advice, but when you have good wins, it is a smart decision to take some chips off the table, have some stable coins sitting there. You don't have to deploy it all back in at the dip. And ultimately, you've got an in real life source of income and you're not just playing with magical internet money. Thanks for watching. Let me know any questions that you have below, and we'll catch you in the next video.